Alright guys, so the asset confiscation is coming. Russia's money is about to be used to fund Ukraine. And this is a big move from I'm not so sure to let's do it. And we must talk about how crazy this decision is. The EU has drafted a law to send the profits from the frozen reserves to Ukraine. And this could happen as soon as July. That's only 4 months away. The money will be used to supply weapons to fight the Russians. It's not for rebuilding. And this exposes two big challenges the West is facing. The first is obvious, the debt crisis in Europe. They can't borrow more money without crashing their economies further. The second is even more urgent. They are running out of weapons. Russia's producing 3 times more ammunition shells than the US and the Eurozone combined. Artillery is a game changer, and Russia is outproducing the West. Western industries are constrained, so the other alternative left is to buy the ammunition. And to buy weapons, you need a lot of money. That's why the Russian assets are on the brink of confiscation. Now, obviously, there will be big consequences for this. The world, especially the global south, will start moving away from Europe. Sovereign assets getting confiscated and used without permission is a really slippery slope. Russia's rather realistic about this. According to Medvedev, he admits that the frozen assets are likely gone. It would break the legal world order by Europe has reached the breaking point themselves as well. Putin will continue as president for 6 more years. That's an absolute nightmare for Europe because the regime is going nowhere. Europe is already deindustrializing, their manufacturing base is compromised, and trying to issue bonds at high rates is also a very dangerous move. Aid from the US might be delayed forever. All roads lead to asset confiscation. But let's go through the plan because it's quite insane here. The EU plans to transfer up to 3 billion euros per year to Ukraine. That's profits generated from the frozen Russian reserves. And this requires approval from all the EU countries, and they will likely get it. The last holdout, Hungary, can no longer resist as well. They were forced to approve the 50 billion in aid to Ukraine back in February. But let's dig deeper into the weeds. Borrell has also offered a plan for the frozen assets, and as you'll see, this isn't money used to rebuild Ukraine, it's money used to fight the Russians. 90% of the revenues will go into an EU fund. This money will be used to buy arms for Ukraine. The remaining 10% will go into the EU budget to boost the defense capacity of Ukraine. In other words, building up the military industrial complex. Now, this plan, of course, has big implications for the conflict. Europe wants to build weapon plants in Ukraine itself. What if the plant gets blown up by the Russians? Will this constitute an attack on European industries itself? So we have gone from reconstruction to weapons using the frozen assets. Not only is the money going to be taken away, the manner of how it's being used is just as dangerous. A week ago, Olaf Scholz told the world Europe will use the assets, and he gave the plan away on a silver platter. It's important that we also do it in a way that contributes concretely to what is needed now, namely ammunition and weapons deliveries. Europe is facing a chronic weapon shortage, and Putin isn't going to pause the conflict for them. In a press conference, Putin gave the West a very clear message. He isn't going to stop fighting just because Ukraine is running out of ammunition. Having peace talks to allow the West to rearm isn't on his agenda. Europe is now facing a very skeptical Russia, a Russia that's burned from the Minsk agreements and the Istanbul talks, and at this point it's very likely that confiscation will happen. Let's analyze the financial impacts because it's going to affect everyone. By confiscating Russian assets almost immediately, all foreign holders of Western bonds will panic. Looking at the G7 minus Japan, there are over $36 trillion worth of Western bonds issued. This could be the first targets of countries moving away from holding their bonds, and this will jack borrowing costs higher for the West. If countries in the global south move away, this will remove a strong bid in the market. Yields will have to go higher to entice Western investors to buy the bonds. Euroclear, the bank where the Russian assets are kept in, will face a crisis as well. They have over 37 trillion euros worth of assets in custody. China is suspected to have at least $1 trillion in Euroclear itself. We could start seeing an exodus of money flowing out to other assets. China, for example, will withdraw their holdings and store them elsewhere. Now, some of course will flow into gold. Another big portion will flow into BRI projects. Beijing will invest even more money into infrastructure projects around the world. So if Europe goes ahead with this confiscation, this will jinx their plan of issuing Euro bonds. Germany and France, they're desperately trying to push the EIB, the European Investment Bank, to finance their defense spending. In other words, they want to use the EIB to issue euro bonds to raise more money. The EIB has a higher credit rating than most of the individual eurozone countries. The idea here is to borrow money at a cheaper rate to finance Europe's war economy. But what happens when you confiscate the assets? Would more countries be keen to buy euro bonds now? You'll be cutting away big investors like China who have a ton of surplus money to invest. Only Western investors will be buyers and it will force yields to go higher once again. So far, Europe has issued almost a trillion euros worth of euro bonds. If rates continue to go up, there are only two outcomes left. Either Europe has to borrow less money or they dig themselves deeper into debt. If they borrow less, building the war machine will be impossible. But if they do, then the debt crisis will spiral out of control. And these are just the first order consequences. We have no idea how bad things can truly get. By using the Russian assets, Europe will also contribute to global inflation. And here's why. We'll see billions of dollars flowing to commodities, oil, and labor to build weapons to build the war machine. You need raw materials. When Russian money hits the markets, we can expect prices to get bidded up even further. Europe's confiscation law is a really dangerous one. It will undermine confidence in the West. It could also ignite a new inflation crisis down the road. And speaking of crisis, the day of reckoning is coming for Germany. And by now, we know how bad the situation is. Companies are leaving the country, the cost of manufacturing is just too high. GDP contracted last year and an official recession is about to come. The Bundesbank has admitted that Germany is in a 6-month slump. GDP is expected to fall again in the first quarter of 2024. In other words, an official recession is coming soon. German GDP for Q1 is estimated to hit minus 0.1%. While people believe that it will recover by Q2, that's a very generous forecast that I don't believe. Germany is fiscally constrained now. Their source of cheap energy is gone, and what's left is importing expensive energy from the Middle East. Berlin just signed a 15-year gas deal with the UAE. On the surface, this sounds good, this sounds very fantastic, but it is LNG imports, which means costs are simply too high. While it might secure Germany's energy security, it does nothing for their industries. The problem here is the higher energy costs. It all comes down to Germany losing their most competitive edge, which was cheap Russian gas back then. When Nord Stream blew up, Germany's link to cheap energy was cut away. They lost 55 billion cubic meters a year from Nord Stream 1. Nord Stream 2 never came online as well. There's an additional 55 billion cubic meters of wasted potential gone. At the peak, Germany imported almost 60% of their gas from Russia, and this is gas transported through a pipeline, which is far cheaper than LNG. The process of liquefying the gas and putting it on a vessel jacks the price up. Just the infrastructure alone for LNG is going to cost a bomb. LNG terminals are going to cost at least $10 billion for Germany. There's additional expenditure the country has to make to bring in expensive energy. That's not all. The cost will continue to mount up. Just hooking up the LNG terminals to the energy grid will cost a bomb. It will cost another $4.8 billion. The problem isn't about energy security anymore. It's about lowering the cost of production. There are just too many manufacturing competitors out there. You have China that can manufacture at a fraction of the cost at scale. Japan's yen has collapsed as well, making their exports cheap. Even in the US, it's cheaper as well. This chart alone explains it all. Germany's cost of manufacturing in black is heading up. Countries like China, France, and the US can access power at a much cheaper rate. China has access to cheap Russian fuel. 70% of French energy is nuclear, while the US has increased domestic energy production as well. Unless Germany can solve this crisis, demand for German products will continue to drop. German factory orders are slumping in a new sign of economic slowdown. After the big increase in December, January's demand fell by 11.3%. The holiday effect is over and is back to reality. There's a direct correlation between cheap energy and Germany's industry. Factory orders drop more than expected because export prices are just too high. The index has been contracting for nearly 2 years. Ever since Nord Stream blew up, the fate of German industries has been sealed. The only way out now is to find a solution to the energy crisis. Now, this could be firing the nuclear plants back up or working towards peace and restoring cheap Russian gas. But either option today is near impossible. Germany is trapped. But one country that's benefiting big is China. Now, despite the decoupling narrative, many companies need Beijing for their manufacturing. And this is where actions speak louder than words. This is a reality check for the West. Apple CEO Tim Cook just traveled to China, and what he said is of extreme importance. No supply chain is more critical to Apple than China. It's a vote of confidence just before opening a new store in Shanghai. Now, even though Biden is trying to contain China, Apple is building closer connections with Beijing. A $2 trillion US company still chooses to build their products there. There must be a reason why. It's because China has always been the biggest country, the best country to manufacture products at scale. Apple is in big trouble today. Sales are declining. They haven't been innovating, and the conversations have moved away from iPhones. Now, when someone says tech, mentions the word tech, the first thing you think about is Nvidia's AI, not really Apple. Since 2021, Apple's revenue growth has been declining year after year. Just last year, growth has gone negative. It has contracted by 3%. This is a big deal for a tech company at such high valuations. Apple needs the supply chains of China to produce a cost-effective iPhone. If everything was made in the US, it would double and triple the cost of iPhones very easily. You need an entire society engineered just for manufacturing to churn out iPhones at a competitive price. It's not just cheap energy or skilled labor, it's the entire ecosystem that Apple needs. That's just on the supply side. Apple needs cheap iPhones to fight with Samsung, Sony, and other global brands. But the demand side in China is even more important. Competition in China is increasing. They are moving towards domestic consumption to grow their economy. The shift away from real estate towards technology means the rise of local brands. Apple's iPhone sales have crashed by 24% in China, slipping to the fourth place. And this caught Apple by surprise. Weren't iPhones supposed to be the best in the world? And this is a major side effect of decoupling. Because of pressure from the US, China is innovating hard and improving their chipsets as well. And this means local phones are getting cheaper and better at the same time. While China's mobile market declined by 7% in 2024 so far, there is one clear winner here. Huawei has increased sales by a crazy 64%. It's a mixture of patriotic buying and phones getting better. Despite US sanctions, Huawei created their 7nm chipset, and this made a Chinese phone on par with the iPhone, and that's why Apple is losing market share, and they can't afford to do so. So the next China is still going to be China, at least for quite a while. Tech companies still depend on Chinese supply chains to manufacture at a price to turn a profit. At the same time, you can't ignore the Chinese market as well. The middle class there is still growing, and if a Western brand pulls away, local companies there will simply fill in the gap. Europe is going broke, and the only growing market left is Asia, and China is a gigantic consumer market for US brands. But things are going to get worse. Biden is planning to sanction Huawei's own chip network as well. Remember the 7nm chip we talked about? Apparently, that made in China chip is a threat to US national security, and they are looking to sanction the chip makers. It's about to go beyond just a tech export ban. The US could be adding a ton of companies to their sanction list, and this includes chip makers and hardware manufacturers. This in turn will trigger a process of domestic consumption in China. If companies are sanctioned away, they can't sell to the US, and that means the only option left will be to sell more to their own domestic market, and this will make people in China shun foreign brands even more. Since 2018, the US government has been slapping China with more sanctions on tech. We are reaching nearly 1,000 Chinese firms on the blacklist, and Biden isn't going to stop just yet. But the sanctions aren't really working very well. China is innovating ahead. The sanctions are helping to build both Chinese supply chains and domestic demand as well. It's helping to build China's industrial base further, so this economic war isn't gonna end. It's gonna keep escalating until one day we could really have a big decoupling, and that will be a world of higher inflation and slower growth. But let me know what you think. Will the Eurozone really move ahead with the confiscation? And is it all over for the German economy? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.